Black Iron CEO Matt Simpson joins me now. Matt, welcome.
Thank you for having me.
Matt, you have been building a iron ore project in Ukraine for quite some time, or developing rather, not necessarily building yet. And you're getting close to the point where you're going to start construction financing providing, and you've really got a great understanding of it. Tell me about the Black Iron deposit and what it all means for the company and its shareholders.
Sure. So with iron ore, what's most important is your proximity to major infrastructure and skilled labor. So in our case, we're only about 2 kilometers away from the government-owned railway. High voltage power lines follow that rail, and our connection point is only 30 kilometers from the site, and we can access 5 different ports between 230 and 430 kilometers away. So all the major infrastructure is really close to where the ore body is located. And as far as skilled labor, which is the other big component for a bulk commodity, there's a city of 750,000 people only 8 kilometers from our site, where a skilled tradesman makes a fraction of what they'd make here in Canada.
Sure. Now, the mining industry generally is very often driven by what precious metals are doing, but you were telling me earlier that iron ore is one of the best performing metallic commodities in the current cycle.
That's correct. It is up about 30% year to date. Was even higher earlier this year. But a lot of people don't realize that iron ore is actually the main building block for steel. And there's so many uses everyday life for steel, be it the car that you probably took to work, or whether it was the train or even a bike, through to utensils that you probably even had your meals with.
Mm-hmm. You bet. Okay, so then most people are going to look at this and say, wow, the Ukraine, isn't there political risk associated with that? And certainly that must be true to some degree, as it is with anywhere. But what is the reality in the Ukraine right now?
So Ukraine very much is a country in transition, and it's a lot better than most people might think. What I really like to refer to is the World Bank Ease of Doing Business Index. When I first started Black Iron back in 2011, Ukraine was ranked 156 out of 190 countries, which is pretty bad. Mm-hmm. This year, the World Bank ranks Ukraine as 64, ahead of pretty much every country in South America, pretty well every African country. So it's by no means, say, a country like Canada, where things are a lot more established and the rule of law is fully enforced. But it's really come a long way in a short period of time, and you're starting to see big investors come back into the country.
Mm-hmm. Fantastic. Okay, and so you've already got great interest in financing this. You know how much you need. Tell us about the actual timeline that would take to put this into production, given the ability to access all the capital you need.
Well, I think that's the really exciting thing for investors in this project, is that in a very short period of time, literally only about the next 6 months, there's going to be some massive announcements that will really unlock the value of this project. So we need about $436 million to construct our initial 4 million tons a year of production of the plant. If you split that between debt and equity, about 40% equity means about $175 million, and debt will be about $260 million. We currently have, in addition to Glencore, which is publicly announced, several other companies, mostly steel mills and trading houses, that are showing a strong interest in entering into a prepaid offtake agreement. So that'll provide the bulk of the equity. We also have 2 China-based construction companies that are very serious about funding about $50 million of the construction cost in equity in exchange for being awarded the construction contract. And on the debt side, we're currently receiving expressions of interest from mostly European banks and credit agencies that will easily provide the $260 million of debt that we need for the project. And all that's going to be announced in the next 6 months.
Sure. So tell me about the economics. How much cash does 4 million tons a year throw off given today's prices, and what is the range of price sensitivities in there where it becomes less attractive?
So today the iron ore price is sitting around $85 a ton. And when people say the price today is 85, they're really referring to iron with 62% content. In our case, this is an ultra premium 68% iron content product in the top 4% globally. So we'll receive somewhere between around $18 and $45 above the benchmark price. So today you would basically sell it for about $125 a ton, and you make it for $30. So the margins are phenomenal, today's prices. I don't believe those prices are here to stay. A lot of people do believe the price will soften down. We use $62 to be very conservative in our economic study. And then after making the adjustments for the iron content and the product quality, we should be able to receive long-term probably around $100 compared to, again, our $30 operating cost. But the beauty of this project, James, is that even if iron ore prices crash, you're still talking about a 20% after-tax return on investment. It's pretty rare you find a project with such strong economics. And it's because we're not building big infrastructure. And what we are building, we're using low-cost, local, highly skilled labor.
Sure. What was it that happened within the iron ore market over the last year to make it deliver 30% performance?
So what happened at the start of the year is that Vale, which is one of the world's largest iron ore producers, had a tailings dam failure. And that resulted in the Brazilian government shutting down a number of their operations, which caused the price initially to spike, almost double actually. You then had, coupled with that, in Australia, which is another huge iron ore producing country, a number of hurricanes that were wiping out some of the rail capacities and delaying port access. So that caused the iron ore price to shoot up quite a bit. It then pulled back a bit with some of the trade war comments between the US and China, but it's still, again, sitting at very, very healthy levels today.
So I guess iron ore demand is very much driven by steel production, which is obviously driven by global economic conditions generally. So if one was bullish, one would be bullish for iron ore. But you said that some people think that the price of iron ore could return to the pre-perfect storm price levels, but that could be easily offset if the global economic growth picture continues to improve.
Oh, certainly. And I think another thing that's important for people to be aware of is that not all iron ore is the same. So in our case, again, as I mentioned, it's a very high quality product. And what that means is you can also make steel for less emissions. So instead of heating up silica, which is kind of a waste product normally associated with your iron ore, the higher the iron content, the more you're actually just heating up the iron. So globally, you're seeing people become more and more conscious about being more environmentally friendly, trying to knock down greenhouse gas emissions, including in China, where the government's put on a lot of emission caps on their steel mills. So even when the global price might soften a little bit, the demand for this product won't soften as much because it allows you to still make that essential steel just in a more sustainable manner.
Sure. And I guess is the premium nature of your iron ore slurry going to be more in demand globally than, say, something of lesser quality?
Oh, certainly. I mean, there's been a structural shift. This is at least how companies like CRU or Wood Mackenzie that do a lot of market forecasting describe it. Where about 2 years ago, in light of a lot of these policy changes in China, it did actually cause the grade premium or penalty, so it's always relative to 62%, to double to triple. And people believe that that number will get compressed or expand depending on what the steel price is, but by and large, it's not going to go back to historic levels. It'll always be elevated.
Sure. How much money has gone into black iron so far since the beginning?
Since inception, about 80 million US has gone into developing this project.
Right, so this is a valuable asset already.
It very much is. I mean, the backstory of the company is we initially listed in 2011, and by 2014, in addition to doing all your traditional de-risking work like feasibility studies and pilot plant testing, probably more interestingly, we actually secured 511 million from Metinvest, which is the largest iron ore company in Ukraine, about 9th largest in the world, to construct what was then a much larger 10 million ton a year plant. In addition to that, we were just about to ink a $280 million offtake agreement. So back in 2014, this was on the brink of being constructed, and that's why you saw such a large investment. Unfortunately, when Russia invaded eastern Ukraine, it caused us to put the brakes on the project for a number of years. But we're back now after 5.5 years of stability in the conflict zone in Ukraine. And you're seeing, again, other major investors, our next door neighbor, ArcelorMittal, for example, putting $1.8 billion into their iron ore mine. A lot of people are starting to come back to Ukraine. Iron ore prices are up, support of government. It really feels like this is the right time to get this project back up going again.
Sounds great, Matt. Well, that's a great update. Really appreciate you coming in today. Thanks for joining me today.
Thank you for having me.
Filthy.